So I'm Ethan with co-host Rob from the DC Day Swing Traders. We have 1,805 members nationwide. And today we're honored to have a very exciting speaker, Marcelo Flores. And Marcelo, I'm going to let you take it away and introduce yourself and give a talk to you. You might as well tell us about your own background rather than me do it.
Sure. Thank you, Ethan. Well, thank you for having me and to show you guys what I do. I've been in markets since 1997, which puts me in I'm 57 years old. And I do have over 2 decades of experience. I started to trade just the stocks. Then I diverted into options, basically looking at bullseye, horizontal breakouts, channel breakouts, new highs, etc., etc. So I started very shy with, I think that it was like $3,000 back then. And I grew the account a little bit, and then I blew it up in 2001 with the Twin Towers. I still remember that day. I'm now going for my second $1 million, just because the first one I was not lucky, so I decided to go for the second one. That was a joke, by the way. I about 5 years ago, I blew my account the second time, and I started to trade futures. So what I'm going to show you today is my futures trading. It's been pretty successful, and the way that I trade is using the Renko charts. Anybody doesn't know what a Renko chart is or needs an explanation what the Renko is?
I don't know what that is.
Yeah, yes, please.
Okay, great. So let me share my screen. I'm going to start. Good thing that I asked that question. I was, preparing the presentation, and then I thought, okay, what if these guys don't know what that Renko chart is? So let me go there and share my screen. Let me know if you can see my monitor.
Yes.
Okay. So let's go to. I'm going to take this.
Marcelo, just so you know, I personally did a little bit of research last night because I didn't know anything about it either. So,
okay,
just so I would be somewhat knowledgeable.
Okay, that's good. Let me see. For some reason, this one is not sync up. 1 second. Oh, this is the problem. Okay, so I guess that everyone knows what a 2 minutes chart is, right?
Yes.
Okay, so here in the left side of the screen, right here, we do have a 2 minutes chart. And then in the right side, what I do have is a Renko chart. I'm gonna synchronize it. This one is, I'm sorry. Okay, yeah, so it's synchronized. So you see that in the right side, we do have bars instead of or plain bars, which are Renko bars. Okay, so what I'm gonna do is to explain what a Renko is, what a Renko chart is that I'm gonna mark here one of these bars. So I'm gonna choose this one, which is a pivot. So I'm gonna mark it down here, okay? And you see, I'm gonna put it a little bit grayer, 50. And then I'm gonna apply it, okay? So if you see the Renko chart, defines a range of price. So you have a high here. Let me mark it. So you have a high there and a low there. And this one is a wick, okay? That little tail there is what it's called a wick. In the 2 minutes chart, you see that we do have in one single Renko chart, we do have the same range. So you have this arrow that I marked here is up here on that value. And then this arrow that I marked down here, I mark it down here in that value. So if this one is 2 minutes chart and the Renko start at this value down below here, you have 2, 4, 6, 8, 10, maybe 11 minutes in one single bar here, okay? So that wiggle that the price does in this area, in this square right here, right, doesn't make any noise in this bar. Any questions on that? Is that clear for those who don't know what a Renko bar is?
So all the highs and lows of the day are eliminated.
No, this is just eliminates the noise that happens in the time, throughout time. It concentrates everything within one single bar.
Oh, I see. Okay.
I have a
Right.
question as to you said 11 minutes.
Yes.
That
So
that bar is 11 minutes. The
this
Renko
bar could last 11 minutes, could last an hour, could last 1 minute. It depends on the speed that the price moves away from the range. Make sense? So
away from the range. Can you
the range, I marked the range here with this arrow up here and this arrow down here. You see it, right?
Yes.
Okay, this is a minute chart. Each one of these bars, this one here, that one there, that one there, that one there, these are 2 minutes, each one of them. Okay?
So on the Renko chart, each of those candles is a different time interval.
No, is a distance in between. The Renko chart is defined by a high, a low, and a step in between the two bars.
Well, my
So it's a
question
price
is,
range?
you've identified that one candle as being about 11 minutes.
In this case,
In this case,
yes,
okay.
this bar, this candle. How do I move this one away here? So
I think
let
each
me.
bar is a price range and not a time frame.
That's correct.
Okay. All
It's
right.
it's a price range in between the high and the low. So you see here, this one, this price here, right? It's around 44.21. This one here is 44.17. That bar is formed when you go from this bar to the next price down. It doesn't have to do with how much time goes in between bars. It has to do with how much the prices advances from one brick to the other. Make sense?
Yes. And is that
The time across the bottom is not consistent intervals because it's related to how long the stock traded in that price range.
right?
Just look, each bar is exactly the same size if you look at it, whereas on time they could be different sizes.
Exactly. So to your point, this next bar here, right? this next bar here is going to have some same distance in between this lower point to that point and this point to that point. Okay, and it's marked when it goes from one price to the next one. So if it leaves the range, it marks, in this case, you see that 4 there, up here, I'm sorry, that 4, that means that there's 4 ticks in between each one of these bars, on the top of each one of these bars, which is called, how can I move this thing away from, oh, there it is, okay. So if I go to the settings of the Renko bar, you see that the tick trend is 4. The open offset is the distance in between the top of this bar and the lower portion of this bar. That is 10 ticks. And when it reverses, meaning that when it forms a tick or a bar to the other side and forms it here, it's 20 ticks. So it moves constantly to the upside unless it hits 20 ticks. When it hits 20 ticks, it reverses on the other side, and then it reverses again, 20 ticks, keep moving to the upside.
So I have one question. Do the ticks relate to like pennies or dollars or?
Yes, the relates. So I do trade 4 instruments basically. With 90% of my trades are crude oil and gold. Then I do trade NQ and ES. So crude and gold, each one of these ticks is $10, or so if it moves from here to up here, I do have $40. So each one of these bricks is $40, and then ES is $12.50. So that is 1 tick. So each one of these bars, so times 4 is 12. It's $50 each bar. Okay.
Thank you.
So it depends on the one tick. One tick has different values depending on the instrument that you're trading.
Right.
90% of my trades are crude and gold. Okay, so which is $10 per tick. Okay. Any other questions on what a Renko bar is? Okay. So I do define these Renko bars in 2 sizes, small and large. Okay, small bars have a little bit of more noise than the large bar. So let me show you that. I'm gonna duplicate this in a new window. Okay, and just to show it here, and I'm gonna reduce the size of this to 2. So in this case, these bars are a little bit smaller. So you have this same now. Let me expand it here for you guys. Okay. Now you see that these bars are half of the size of the large bars. I call this one small bars. Okay, and this area that I formed here on the right side, right here, is the same area that I have in this here. You have more noise in this area. 1 bar now is several bars here. You see that, right? So the distance in between the top of each one of these bars, instead of being 4 ticks, is 2 ticks. This makes it a little bit noisier, so I could have more entries and exits, but at the same time, I risk less money. Okay, I could risk, well, actually, it's half of it. So if I enter my trade in this tick in this area here, and it reverses on me and it stopped me out, I lose about $120. But if I do the same here and I'm stopped out down here, then I lose that double, $240 in. I'm sorry, I'm thinking in crude and in oil. In ES, it's going to be a little bit more, 150 and $260 or 380, something like that. Okay.
Got it.
All right. So just for you to know, there are different sizes of Renko bars that you can define. Okay. So I'm gonna go now to the presentation. The presentation is about setups and triggers. Okay. So that is what I'm gonna cover. So I have a question. Anybody names the setups and triggers, or the setups that you have to enter trades? Anybody? Or let me ask it the other, and let me ask it that way first. Do you name your setups and your triggers, or your setups?
I would want to get a break of a resistance level, for example.
Okay. So that is one of your setups, a breakout of a resistance. Yes?
Yes, yes.
Okay. Anybody doesn't have defined setups?
I think I have them defined in my memory. I have been trading this instrument so long that I can see after a while what it's going to do. And this morning was a perfect example. I had seen what it was doing before, and I waited for confirmation that it was going to do that. And then I entered the trade.
Okay. All right. So I figured out that over time that I needed to put names to my setups, and that is what I'm going to show you. Let me go and start the presentation here. So I do have, this is I believe that this is a good recommendation. You can take it or not, but I think that defining the setups is a very good practice, because it tells you, especially if you are in the beginning of your career, that would give you a good understanding of when you are going to be able to enter, and when when the setup is not there, so you stay away. Okay, so the first one is compression break, and I'm going to go over the compression break, what it is and how I recognize it. But basically the instrument is under compression. So I'm sorry. So it's under compression. And what happened is that at some point, it's going to break. And so that is a break out of compression. Okay. So if it breaks right there, then I can take the break. There are two ways to take that break. One is the break out of compression, or the retest of the compression break. So that is my S1 trade. Then the trend reversal breakout. Okay, so market goes in one direction. Let's say that it's going down, do something, and then reverses. Okay, I have a specific setup there and a trigger to move to the when I identify that the market is moving to the other direction. So I do have the trend reversal breakout. The third one is the week of the cloud. So I use the Ichimoku cloud in my charts. So when Renko bar, when the Renko bar makes a week off of the cloud in the direction of the trend, let's say that I'm bullish, and the price comes down to the Ichimoku cloud, and then bounce off of that, then I know that I have a setup there. Okay, so the probability that is going to continue that direction is higher. And then the last one is a week out of the moving average. I use 3 or 4 moving averages in my Renko charts that I entered when I see that setup. Okay, so I use only this 4 setups. I know others, but if I see them, most of the time I don't take them. These are my bread and butter, and I don't eat anything else. Okay.
So basically, by setups, it's sort of like patterns. Is that what you mean? You're looking.
That's exactly right. Yes.
I see. So you sort of have this scripted. So you're ignoring all the other stuff, and you've sort of simplified it down to these 4. And so you're continually scanning for one of these 4 per stock, for example.
That's exactly right.
Gotcha.
Okay. So and then there are time setups that I have there. I do have also tick charts and time charts in my monitors, but these are kind of like in the case that I miss an entry on one of these setups, I potentially see if I can enter in one of these, either bull flag or a shooting star, or mostly bull flags is what I look. But this is my, as I said, my bread and butter right here. Okay. Okay, so I'm gonna go and skip. I do have also a checklist on what I check on the Renko chart, on the Renko chart setup. So if everything looks good in here, right, I took the trade. So I do have alignments of moving averages. If it's the momentum is in the direction of the move of the price move, then that's another thing that I consider. Is the price above or below the cloud, etc., etc. So this is my checklist. Okay, so if you get later on interested in Renko, this checklist could be a good idea to look at. Okay, so
wait, go back. I have a question on that last one. On the 5th bullet down, it says 50 SMA is aligned with the 50 SMA. I don't understand that.
Okay, so what happened is that there's a 50. What I do have is a smooth 50. Probably this one is not correct. 50 SMA is aligned with the 50. It should say the 50 SMA is aligned with the smooth 50.
Oh, I see. Okay.
Okay, the smooth 50. Do you know what that is?
No.
Okay, the smooth 50 is the 50 SMA of the 50 SMA.
Yes.
It's an averages on an average on average of
Oh,
averages. Okay. And I'm gonna show you where that line is and what the setup is. Okay, I can do that. Okay, so this is the first one. The first one was compression break. So basically the theory is that you have a resistance up here and you have support and price is moving in this range. This one is what I called compression. So the market is either in compression or expansion, right? So if it's expanding, it's going bullish or bearish. In this case, we do have a bullish break, but now we are in expansion. But in this area, we are compressing, right? So we are in compression and then we break. So the break is what I take right there. Okay, that is the trigger. Okay, this is in theory, right? Now you do have this pennant or this other formation or triangle where you get also price in between these two compression areas, and when it breaks here is when I take this break. So compression normally the most common one is this one. This one you can also identify it, and the trigger is when it breaks the resistance or the support in the because this one could break on the other side, right? Could break to from here to there, and then your entry would be right there. Okay.
I have one quick question. So are you, maybe this is the wrong question, going back to what Beth mentioned earlier, but is this like within one day or a week or a month, or it could be 6 months, or
No. This works everywhere. And anytime, now I use it intraday in a day trade.
Oh, okay.
This is intraday trading for me. Okay. But I also do options, and I analyze the setups under the same parameters. I do have more setups though for options than for intraday. For intraday, for me, are only these 4 setups.
And you would go in like in the first, you're showing 2 diagrams, and the one on the left, or my left, the other one. You would then possibly go in where you have the blue line right when it breaks?
Yes.
I see.
Or I can do what it's called a break and retest, right? So if the price breaks here, most of the time it's going to come and it's going to bounce out of there. Okay, and that is another setup. This happens.
Do you see
all
these
the
on
time.
the Renko charts or on
Yes, in the Renko chart. I'm going to show you.
Okay.
Okay. This is a Renko chart, a picture. I don't know if it's that clear, but I do have here a compression break very clearly, right? You have compression there. You stay away, or I stay away from this from entering here all the way until it breaks right there. And so I take that run all the way. So the more it stays there, the stronger this compression break is going to be.
What is the time frame in this chart?
Remember, there's no time in Renko, but in this area here, could be it's intraday. All of this is intraday. Let me show you a real bar. So in here, I'm going to expand this one a little bit for you guys.
On a Renko chart, does the bar appear all at once or does it tick around as the trade goes?
It appears all at once when today is the market open now? Yeah, 8:48. Okay. $8.34. So now the price is right there, right? 44.35.75. And now it's wiggling in between these two values, 44.37.25. When it goes one tick above that one, then it's going to form another bar. And when it goes below 44.31.25, which is this value here, it's going to form a reversal bar. So now this one is the bar that it's live. Make sense?
I see. So you can actually see the breakout in each bar.
Exactly.
Yeah, I get it. What's the pink, white, green, red thing? Does the color have significance?
Pink, white. Oh, okay. Yes. So this one is an indicator that Ruggie Horn put together, and it's called grab candles. Basically, the white ones are indicating that you are close to the, or we are in a band close to the 34 EMA. Okay, this yellow line is the 34 EMA. If the white is formed, means that the candle closes within the band of the 34 EMA right there. So when there's a change of color, it's leaving the 34 EMA band, and that could give you nothing is for certain, but could give you a potential entry. That is not part of my setups, but it's kind of like an indicator for me.
All right.
Okay. All right. So compression break. So every morning before the market open, I go to my desk at 8 a.m. Let me change this one to 2. Probably it's going to be. Okay. This is before the market opened. I go to my computer around 8 o'clock and I identify the tops and bottoms to define a range. Okay. And this is what you see, this box that I marked here. Is the market trending or the market is sideways? I think that is sideways in this case. Okay, so you see that there's a top there. There's another top there. There's another top there. And in the bottom, there's a bottom right there, a bottom. I try to see if the market is trending or it's kind of trending downwards, right? But it's mostly it's sideways. It's going down, but it's sideways. So what I do initially is to identify, okay, this market is going sideways. So most likely I'm going to have a range day. Not for certain, but I could have a range day. So I mark here this area, and then I marked this area up here, right? Which is kind of a measure move. I'm sorry. That area, that red area for me is resistance, and this one is support. Okay, it's actually a measure move from here to there and here to there, right? So that is equidistance in between the higher area, the higher portion of this range and the lower portion of this range. Okay, so I marked this and I said, okay, the market most likely is going to, move and come back to this area here, which for me, this area here is a magnet. Okay, it's going to try to go here and come back, or it's going to try to come down here and come back up. So for me now, I'm looking a range, and I'm looking for a breakout to go to either one of these areas first. So this is what happens here. This one is the 30 minutes opening range, right? Market tried to go down in the open, but came back up. Okay, now I'm in a range. You see that? And now it's trying to break. This is my first entry. Do you see that?
So that's your compression breakdown.
That's my this is my compression area.
Yeah.
And this is my break. Now, it could have been up here, but since I have the opening range right here, sometimes I decide to wait until it breaks that low also, right? I could have taken it here, which is a little bit more risk, but this one is a compression break. Market is in compression, and it's leaving the compression in simple terms. Okay? Now, here you decide where to sell, right? It came back. Remember that I said, you know, it could go down and then retest and then continue moving down.
Right.
So you could have here for, well, this is 2 ticks. I'm going to come. So, okay, I use 2 ticks just to identify tops and bottoms. And then I come back here and I put it in 4 because this is what I kind of like. This is what I trade. It's a larger risk, but it's larger rewards as well. So when it breaks, I put my stop in the candle that breaks. So let's say that I enter it here. My stop is going to be up here. So I would have one first loser if it goes above that one, which is okay. It's about 100 and maybe close to $160 what I lost there.
I have one question. I hope this isn't stupid. Are you going short here or long?
Yes.
Short, right?
Short. Yes.
That's what I thought.
I'm going
Okay.
short.
Because it broke the compression downward.
Exactly.
Okay. I just want to make sure I had that.
I am. Yeah. That is a really good question, Ethan. I am not a counter trend trader. I trend with the trend. All my setups are with the trend. They are not counter trend. Okay.
Got it.
Okay. Now you see
You
that
look at a minute chart at the same time as you're looking at the Renko chart, or do you trade entirely off this?
I trade entirely on this, but I do have here, instead of the 2 minutes, I do have the 30 minutes. So I trade in the direction of the higher time frame on the 30 minutes and also in the Renko. Let me on the Renko, let me show you my other screen. This is my main monitor. I never show this one to anybody, but I'm gonna do it for you. Hold on. I have to have my secrets.
I was just going to say Marcelo's secrets.
Hold on. How do I share a different monitor? I have to stop sharing to stop. Pause. No. Hold on. Stop share. I'm gonna share my other monitor. Hopefully you can see it. Share. Do you see my monitor?
Yes.
Okay. So here, Beth, here is ES, and the size of this bar is double the size of this bar. This is my entry bar for 8, for 4 ticks, right? This is 8 ticks.
A multi-range analysis versus a multi-time frame analysis.
Exactly. So I trade in the direction. This is kind of similar to the 30 minutes. If you see the 30 minutes and you put it side by side, I do have both though. But if you see the 30 minutes, you see how that one is moving down, same as this one here. And then moved up, faces the moving averages and the cloud, same as here on the 30 minutes. So it's kind of like double checking. I feel more comfortable looking at the Renko chart higher time frame than the minute, but I see both. I like this yellow dotted line that I have in the 30 minutes is the 50 SMA.
Okay? What happened,
How do you assess?
baby?
Sorry, do you want me to hold questions?
What?
How do you assess if you've had a
Oh, okay.
price consolidation in a range for a long time versus a price consolidation in a range for a short time? I guess to me it matters, did the price trade sideways for 5 minutes or did it trade sideways for 30 minutes? How do you see that here?
So I don't see it here, but I do have another trick. I'm looking also tick charts. Okay. So in the tick charts, I paint channels. This is what most of the people, or a lot of people likes. I do look at this as well, but my entries are this is too confusing to me. I do have some good knowledge of how this one works, but for me, the more reliable entry is given not by a tick chart, but the Renko chart. It's more reliable. I don't need to see the time moving sideways, even though I think that it's better for trend lines. I don't trust the trend lines on the Renko charts. I look at the support and resistance more than anything in the Renko chart. Does that answer your question? Or
Yes, that answers the question. Thank you.
Okay. All right. So so this is what I do, what I see, right? So my morning trades are here in the right side of the channel or chart of the screen, right? You see a very nice run in the morning in gold today. This one was beautiful, right? And if you see here, this run from this week or this break here down until there is $440.
Smoothie. You want some? Sure. It's mango, banana, and strawberry. Please. That sounds good.
Okay. I want that strawberry too. And then here, if you take that entry from here to the reversal there, that one is $550. And then here, if you take that entry there and you were stopped here, when it reverses, then you would have a loss of $100. But if you take this next one here until it reverses, then you have $370. If you were moving your stops down here, you would have a potential to make $1,500 today, $1,700. Okay,
Got it.
makes sense. So this one, this is what I see, and this is my main monitor.
Can I ask, what is the you have an oscillator in the lower panel of the chart? Is that a MACD oscillator?
It is called MQ momentum, but it's a MACD modification. I paid for that indicator. I don't think it's worth it. One of the I did create about a year ago. I started to publish some stuff in YouTube, and so the way to set it up is in one of these strategy videos that you can visit there and put it there. And in that video, I indicate what is the setting for MACD to simulate this MQ momentum oscillator.
It looks a lot pointier, sharper than a normal like MACD type oscillator.
Yes.
Is that because it's charting off of a Renko chart? Is that why it looks so
No,
the turns like that?
no. It's an indicator that I bought, and I bought it because exactly what what you were saying. That's
gotcha. Okay.
nicer to look, but it's the same setup.
Gotcha. Okay. Thank
The difference is that it marks, gives you this 25 level here and there. The 25 level that indicates to me that I'm still the value of this is not oversold or overbought. Okay.
Okay, thank you.
Let me go back to my other monitor. Okay, so is this helpful? Okay.
How do you get a scan for this kind of intraday breakouts?
I'm looking at the monitor. I don't scan it. So
Okay.
remember that I trade only 4 instruments.
Oh, got
So
it.
I'm looking at the 4 instrument in my screen. That's it. So I don't have any alerts. If I miss it because I'm looking at another monitor, I missed it, and that's it. Sometimes I just jump on it, and then I'm lucky, and it keeps going. If it's around this area here, I'm not going to jump. Okay. So this is compression break. Trend reversal breakout. Another setup, second setup that I entered. This one is a trend reversal. So market is coming back down, making lower highs and lower lows, then makes a lower high right here, and then makes a higher low right here. Crosses the moving averages, hopefully. Sometimes it doesn't, and the moving average is up above here, and then the entry is right there. Okay, so lower highs, lower lows, a higher low, low, and then I'm looking for a higher high now. And this is Ethan, this is the setup that I was explaining the other day with I think.
Yeah, I think is it S? We need muted.
Yeah, I believe that he's. So okay,
Sorry.
so this is coming back down, lower highs and lower lows, and then it's going to reverse. The trend is going to reverse, and it's going to go higher. Same thing if I sometimes call this one a crown formation. Okay, when I identify that we are extended to the top, and then we make a higher a high, then comes to a higher low, a lower high. Then if it breaks this one, I'm going to jump into this trade. It's a trend reversal breakout to the downside now. Looking for a lower high, a lower low in this direction here. Okay, so here is an example. Okay, so we do have lower highs and lower lows right here, right? Comes here, makes a higher high comparing to that, right? And then comes back. It's not that clean, and real life, as you probably know, not always is very clean. But if we had, and this one is NQ, which makes it a little bit more noisy as well. So when it breaks above this high, then I'm looking for a higher low right here. So in this area here, I may have a resistance, and you see that it went through and then revisit this point here. Right? So come up, test it, and continue moving to the upside. So, but the setup is, or the trigger is when it breaks above this one. This is a trend reversal breakout. I don't think that we did have a trend reversal breakout today. That one there. So lower highs, lower lows, higher, a higher higher high, higher low, break, entry right there.
Entry where?
Right here when it breaks that level.
And then where's your stop, your initial stop?
My initial stop in a breakout is always one bar below the first bar that breaks.
Okay. And then how, as the trade progresses, how do you manage it?
So I do have two alternatives. Either, well, when I make 5 bars, I go break even.
You move your
So
stop to break even.
Yes. If it, or I also have a rule of 5, but not in the breakouts. Rule of 5 means that if in the first 5 bars comes back and give me a reversal, like in this case, I may exit it. If I would enter this one here, which I'm not going to do because I don't do trend, I don't do counter trends. This one is a counter trend clearly. So if I'm in this green area here, remember that I said, okay, most likely the price is going to come here. This is a magnet, okay? So the price is going to move to one of these areas and then come back, try to come back to this area here, which in this case it did, right? So if I enter a week, then I'm going to put a stop if it reverses in the first 5 bars. So I could have an exit here for a small loss right there, okay? But if on the break, I'm gonna put the stop right below the candle that break, which is this one here. And if you see, I could have been stopped out because there's a wick there that didn't close, but it's a wick anyways. So if I entered here, the bar would be, or the stop would be here, down below. I could have been stopped out, but if it then moves to the other side, then I would enter it there.
And the
Again.
stop below that triggering bar.
The what?
And your initial stop is below the triggering bar. And
Yes.
then when you go 5 bars, you move
I
your
move it
stop to
to-
break even. 5 bars could be a half an hour, or it could be 2 hours, or it could be
Exactly.
minutes. Okay. Depending
Exactly.
how fast it changes its range. It's
Exactly.
okay. Huh. And do you use targets, or are you just always relying on a stop?
Okay, you see all of these lines here? These are pivot points, right? So, or support and resistance levels. I use this as targets, and also I use the prior price action as targets as well. So if I see a lot of congestion here, I'm not going to challenge it that much, right? Because it's there's a lot of resistance here, right?
Yeah.
So
It's
see that.
interesting. The price levels are relevant, but that time, I'm trying, it's the time feels different. Okay.
Yeah. I know. Sometimes you enter it and then you see it and it doesn't do anything for 15 minutes, 30 minutes, and then boom, 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 starts moving. So it doesn't,
And are you trade the option then on the breakout? You're buying an option?
No, this is straight futures.
Future. Oh, I see. You're okay. Yeah. All right. Sorry.
Okay. Okay. Crude oil. Somebody said that crude oil today was gorgeous, right?
I think Carl trades gasoline.
Yeah, I didn't look at crude oil chart today, but the gasoline, which generally follows crude oil, was fantastic.
Yeah. So there's an entry here on crude oil. That one there was an entry that was a loss, right? This is a week out of the. Oh, I'm sorry. I'm not doing this correctly. I'm sorry. I started to. What I wanted to do is to identify another trend reversal breakout. So you see, we do have now lower highs and lower lows. There's a lower high here, or higher low right here that didn't concrete in the breakout there. So it kept moving down, it did make another low, then it went up, down, and there's a break right there for a nice move to the upside. So this is another trend reversal breakout. Do you see that? Did you see that? No? Yes, no? Anybody?
Yes, I see
I
that.
see the trend reversal, yeah. And the
Yeah.
Okay.
Yes.
Right. So the formation, the pattern is pretty typical. Up, down, down, lower, higher low, higher high. So this one is or higher low. This one is higher than this one, and then the breakout right there. Okay.
Do you ever get in the pullback and not wait for the breakout?
I'm sorry, what was that?
Oh, I guess you had that other pattern. I was just wondering, like in this last thing you're showing, to me, you get a nice buyable, once you get the higher low, do you wait for that breakout or do you ever get in before the breakout?
No, I wait for the breakout.
Okay.
So it is a setup and a trigger. I wait for this for the for the trigger all the time. And a trigger is 1 or 2 ticks above the resistance level in the trend reversal breakout.
Okay.
Okay. Now there are other setups here that I wanted to discuss, but let's keep going. Okay.
Yeah, I love that you have it all mapped out and everything is clearly, you know, what you do and you have the names. Well, I
Yes.
really like that.
Yes. So this is a week out of the cloud, third setup. Okay. So I do paint the Ichimoku cloud in my charts. So a week out of the cloud is exactly that, a week that forgetting about the moving averages that are coming, you know, this way. I'm looking at the week out of the Ichimoku cloud, okay, in the direction of the trend, okay? And if it's a short, then I do have a week out of the cloud right here. This one is a long and this one is a short, okay? And
is this a counter trend trade or
no?
Because
Again,
the cloud is trending upward?
No, it does. So the price is below the cloud. That for me, it's a directional trade. Right? Yeah, the cloud in this case is trending. Well, I know what you're saying is trending, but here it's trending up. But I don't know what happened before this. But it's a short trade. It's coming down. Okay.
Mm-hmm.
What do you mean by the cloud? I don't understand.
The Ichimoku cloud is an indicator that I paint in my chart right here. If
I see.
Let me show you, Ethan. Come on. Indicators. This is, I use NinjaTrader 8. And then in here, I do have Ichimoku cloud. This one is the indicator right here.
Oh, I see.
Ichimoku cloud. And I think that this one is downloadable. I don't know if it's coming. I don't remember if it's coming with the package with the NinjaTrader 8 or not, but it's you can download it from the ecosystem on but every, I mean, if you're using TD Ameritrade or TOS, the Ichimoku cloud is there too.
I see. So you're looking for where the Renko charts are above the cloud to the right there? Is that the idea?
Yes. So here I do have a week out of the Ichimoku cloud. You see that one there?
Yes.
Now there's a couple of things that I don't like on this entry. It's you know, I'm in a range now, but it's bouncing off of the cloud. In here, another one, but it's still, I'm in the range, right? I'm still in the range. So I try to avoid my entries right here. Okay. So here, no, this is away from the cloud. But here, that one is a week out of the cloud. Another week out of the kind of this is what out of the moving averages instead. This one is a week out of the cloud. If it's trending, it's even better. Okay, so let's see. That one could be a week out of the cloud. It's a little bit away, but okay. Clear?
Yes, I understand.
Okay, good. I like it. All right. Let's go to the next. Okay, yeah, I have some samples here. So week out of the cloud, right here, very powerful. Week out of the cloud, right here, nice. And then obviously what I do is to check the momentum on my oscillator indicator, MACD or actually there's another one that it's that I can share with you at some point, that I haven't used in a long time, but it's a nice. You see that this painting is a little bit different. There's another indicator that I can share with you that also helps to smooth or to highlight the MACD. If you guys are interested in that, I can share. Where do I took it from, or what is the name of it?
Yeah, sure.
Okay. And then the last one is the week out of the moving averages. Okay, so I use 4 moving averages in my entry chart. Okay, this one here is the 50 SMA. This one here is the 34 SMA or EMA. This one is the 18 EMA. This
It's
one
moving
here,
averages of the Renko bars.
yes.
Okay, so it's not related to time. It's a
No, yes,
okay.
you're right, Beth. So,
So it wouldn't, sorry, it wouldn't correlate to a 50 moving average on a chart that's time-based, like a candlestick chart. It's its own moving average. Okay.
Correct. So, but there's a way, and I used to have it, where you can put a moving average, the 50 EMA, in for a 30 minutes chart in a Renko bar chart. There's a way to incorporate it there. I don't do it anymore because I'm looking at the moving average on the 50 here, right? So this one here, this one is a 50. That one is the 50 SMA on the 30 minutes chart. So I'm looking at it too. And then when it's right there, this one is actually very nice, powerful magnet. The 50, I love the 50. So this one is a magnet, or look at that, it's crossing. This is what crude. Yeah, it's a magnet, right? So it's a very good resistance or support right there. So in this case, I don't have a setup here, right? I don't have a setup here. I'm already away. So none of my 4 entries is a setup now. It could have been a setup right here when it makes the first week, but not now.
Is volume relevant in this?
No, not for me. Intraday, I don't look at volume. In my swing trades options, yes, I do. But not in the. I used to have this. What is the name for that indicator? Delta. What is the name?
If you showed volume, it would almost be like a volume at price indicator, sort of, that because each bar is showing you a price range, so you could see how much volume was done in that price range.
Yeah, really, I don't look at it. I used to have the cumulative delta indicator there, which represents a sort of volume, but I don't do that anymore. Okay.
The comment I have on volume is once you have been trading for a while, you see that there's increased volume by the movement, the speed of the movement of the price. And it's either chopping around, which is going to give you low volume, or it's moving up, or it's moving down, which is going to be higher volume. There may be people who know and studied volume more than I have that have some rules as to how to use it, but I never use it because I feel I can see when there's increased volume by the price action.
Especially on shorter time frames.
So I do have cumulative delta for open ring, open flow, cumulative delta. I used to have this one here open, and it gives you, you know, a good indicator what the price is going to do. So it's moving up, and now it's moving up there. But I don't use this one anymore, really. But it was good indicator that it's going to reverse the trend or it's going to start moving up. But I don't pay attention to this anymore. Okay, so week out of the moving averages. Okay, so in crude today, we do have a week out of the 34 up here, right? So there are two ways to approach this. So you can have an entry. You can have an entry, or you do have an entry right there, okay? And then you put the stop up here, okay? And so price moves up, down. You could have been stopped out, and if not, then you move it went to go all the way through here, okay? Then it moves up, your stop is still there. Now you either move your stop on the 5 ticks on the 5 candles to break even. So you are now here to preserve some oh no, I'm sorry. So break even would have been down here. So your stop is around there. And now price comes here, makes a wick out of the 18 EMA. Now your stop could have been right there. Then you comes back, and then if it closes above the 34 EMA, then you can decide to close that one, close there. Or if you wait, then you can put your stop here, and then here, and then here, right? And then you're still in the trade until you're stopped out right there. Right? So the potential on this trade would have been from here to where you stopped out, $900, $960. Or you could have been stopped out here for 410, right? And then from here to there for another 370.
I wish I could share my screen because this tracks very well today with RB, the gasoline. It made a break. The way I traded it is with the Fibonacci retracement tool, and when it made it went down to 78.6 Fibonacci level before it reversed, and I got in it just above a few ticks above the break because I knew it was going to break below the overnight low, and I took it down to the 78.6 because I'm just not going to take a trade further than 78.6. And I hit the bottom, which is rare, before it made a retracement back up. It was perfect.
So let's see if I can help you on that. So simple levels, I'm gonna put my fib right here. So from where to where did you put the fib?
From the overnight low to the overnight high.
From the overnight low. Hold on. This is the overnight. Oh, the other way, right? Because you're extending. So you have the overnight high here and the overnight low right there. So you're extending that break into 127 and 161. Would that fit what you were trying to do?
Let me go to my chart here just to confirm. Well, the way I put it on there, the overnight low is at 0, and it then goes to minus 23.6, minus 38.2, minus 50, minus 61.
Oh, okay.
And minus 78.6. And it just hit minus 78.6. So when I put it on there, I started at the overnight high, and then and then went down to the low, or I started at the low and went to, I think I went from the high to the low. Yeah. So
yeah,
I was at minus 78.6 is when I exited, and that was then it had a retracement, and then it did go lower later, but not much. It wasn't worth chasing it.
Okay. Let me see what else I have here. So week off the moving averages. That is what we were, discussing. So you have a week out of either the 34, the 18, which is most likely the one that I use. Then you have the 50 or the smooth 50. Okay, and then same thing on the other side for a short week out of the moving averages. Okay, so you see it here. That one is a week out of the moving average, and this one is a week out of the moving average. I paint the zone in between the 18 and the in between the 18 and the 34 EMA, because for me, if it breaks there, I used to have the 21. But the market, for some reason, I started to use the 18 instead. So the 21 should be in between these two lines in this area. So I'm still considering this a week out of this zone as a week out of the moving average. Okay. In here, I did have momentum. In here, I'm extended in momentum. So this trade here is riskier because of this extended momentum. I think that's what I for setups and triggers.
Marcelo, I had a question for you. Thanks for I've always, I remember seeing Renko charts a long time ago, and I thought they were really interesting because clearly they smooth out all the noise, right?
Mm-hmm.
That's really the advantage. I just curious. I've always just used candlestick charts, but like, what would you say are the advantages and disadvantages of using Renko charts versus
Yeah.
candles?
Thank you for that question. When you have a run, you actually, if you're looking at the candlestick charts and the tick charts have more information and more setups if you use that. There's I'm not sure if you're familiar with second entries and fail entry shorts. Are you familiar with that terminology or not that much?
Yeah, I mean,
Okay.
yeah.
So all of those are going to be very well recognizable in this time charts handle. So lots of people use the 5 minutes, and then you can start recognizing entries right here. So you have first entry, you have a new high there, first entry, second entry long right there. I don't, if the bar is large enough, all of this noise is not going to be reflected there. So that could be a disadvantage if you're in the middle of the trend. So let's say that you're here, you're in this area here, you don't have actually a setup or an entry here. You have to pay your attention in this area here to see what's going on. It's not the same area, but you know what I mean, right?
Yeah, I mean, so you're saying that's a disadvantage of a Renko chart because
yes,
there's no entry when it's making a run.
Exactly.
Yeah,
you have to look at more information in the time chart or in the this one is smoother. You can have here 4 or 5 or 7 candles, but they are going to be, and probably is this same one here. Let me see. Yes, 5 minutes. No. See, this one is the same thing. Here you see that there's more information what's going on here. For me, it's only one entry. So, which is that one there. And here you do have, that entry here, potentially that entry right there. So I would say that it depends on and if you put that 2 minute, you're going to even have more information. But it's this one is for me. This is more, the Renko chart is more straightforward for me, but it's also simple. And the other thing is that with this, I am recognizing very well, or the advantage of this one is that I can recognize very well the pivots. Right, that pivot here, this pivot here. Well, this one is 3. I consider a pivot when it has 3 in the back and 3 in the front. So this one probably is not a pivot, but this one it is. This one is not. This one it is. This one it is. This one it is. If you see here, it's kind of like, okay, is this a pivot? Yes, this one is a pivot. Is this a pivot? I don't know. This one is a pivot. Yeah, probably. In my Renko is not, but in here it could be. So,
yeah. Yeah, no, it's a really interesting chart. I remember seeing it a long time ago and thought it was just, I mean, it's so nice looking and clean. It gets rid of all that noise. I just never looked into it, so I appreciate the hearing about your strategy and how it can be used.
Okay.
All right, very good.
Let me. Do you guys have more time?
Let's see where we're at here.
It's 9:30. So
yeah, just about 9:30. How much more do you have, or?
No, I just wanted to the overall strategy on this is probably going to help not only to the Renko chart traders, but overall, if you want
Yeah,
it.
sure, go ahead.
Okay.
If people need to leave, they can leave. And but thank you everyone for coming. It was really terrific, Marcelo.
Sure.
Yeah, thanks, Marcelo. That was fabulous. Very interesting.
Yeah,
Very
I
interesting.
agree. I thought it was a great presentation.
Thank you. Thank you so much. Okay, so let's go through this real quick. How do I face? I call this one, how do I face my day? Okay, so first of all, my trading day kind of dynamics. Okay, so first of all, what I do is to identify what type of day I'm going to have. So I early in the morning, I recognize if it's going to be initially it looks like a trendy day or an expansion day, or it's going to be a range day. And I think that I show you that in the before, right? So I put my range day as a magnet, and then I put my target to the upside and my target to the downside as measure moves. Okay. So then when I identify that, what I do is to check the analysis, right? To see where the support and resistance levels are on the market. So if it's uptrending, I'm going to have support and resistance. If it's downtrending, same thing. So I want to add the analysis. So I'm gonna paint support resistance levels, or I'm going to put a channel or ascending channel or a descending channel. Okay, and then in those areas of support and resistance, I'm going to identify my four setups: breakout of compression, trend reversal breakouts, a week out of the moving average, or the week out of the cloud. So that is the order, right? So I'm going, from high level to find the setup. And then why? Because the setup should happen using the right analysis in the specific day. Okay, so let me go back to expansion now. So expansion should be when I in the morning when I identify expansion, right? So market is moving up, and in this case is bullish. I'm going to identify my resistance, and I'm going to identify my support. This is 101, right? Trading 101. So my stops are always going to be below the trend, the trend channel. I'm not going to counter trend. I'm not counter trending. So I'm not going to put an order up here looking for the lower side of the channel. I'm always going to look for longs in the lower side of the channel. And then it's going to move to the other side of the channel, hopefully, and to the other side of the channel. And I'm going to move the stop accordingly. Okay. Same thing on the bearish side. So I don't have to explain it again. Okay. In the bearish side, I'm going to look for shorts in the upper side of the channel moving down. I'm not going to enter or look for a setup right here, even though it looks beautiful. If I have a trend reversal or week out of the moving average in this area going short, I'm not going to enter it. That increases the probability. If I have it here, so be it. That's good. I'm going to enter it. Okay, so I'm going to identify the setup in the support or resistance. In the I'm going to take the profit. I'm going to take it hopefully the closer to the other side in the resistance level, and then in the short I'm going to take it in the other side. And then, yeah, that is what I'm saying. So the target is going to be on the other side of the channel. So what I'm saying is that my setups, my four setups, for longs are going to be in here in this area. And sometimes what happens is that the setup is triggered up here and the price continue moving to the upside and I miss the trade, and I'm good with that. I don't care. Okay. Yeah, I think that's
I really
that's
like
really
your
good.
diagrams. They're great. Very easy to understand.
Okay. Thank you, Ethan.